first month of Q2, which means that Q1 earnings season is well underway, and whiplash in the market has continued. And sadly, I think it's going to keep continuing as we get through this earnings season and maybe even as we get through summer. We're dealing with a lot of things, and I know I've covered that quite a few times in this podcast, and I'm sure you've heard it in other outlets as well. We're dealing with a lot of headwinds, and we're dealing with a lot of uncertainties.
There's a lot of investors freaking out right now because SoFi's stock price has recently been crashing. But guess what? It's not just SoFi. It's the whole market. S&P, NASDAQ, Dow Jones. They should just add an N at the end of Dow because everything is just down. Days before the earnings call, SoFi closed at $6.44 per share this month on the 6th, a 7.15% rebound from May 2nd's new all-time low recorded in SoFi's history. It's a very exciting week for investors with all of these earnings releases coming up. What can we expect from the market as a whole? Screenshot this earnings release picture so you know what to expect for the week, and make sure to subscribe to Wealth Gambit. If you haven't already, turn on your notification bells because we'll be posting SoFi's Q1 2022 earnings call audio and also be doing an in-depth breakdown within a few days. Also, shouts out to Earnings Whispers for always coming through clutch with earnings info. So, what does SoFi's head of investment strategy, Liz Young, have to say about rising prices, the different decisions we make as consumers, and how this affects the economy?
As prices have risen and as they remain high, you start to see the consumer have to make different decisions. And what I mean by that is choosing between spending money on more discretionary items versus necessary items. When we think about things like food and energy, we know that food prices have started to really rise and energy prices have been high for a while. So as that keeps eating into consumers' bank accounts, they have to make choices about what they might have to give up or other things that they can't spend as much money on. And that affects the economy through GDP. It affects the economy through consumption. It also might start affecting business spending.
These clips were taken from a recent podcast called The Important Part, Investing with Liz Young. We've linked the full podcast episode in the description, but if you don't have 43 minutes to fully listen to it, we've got you covered. We'll be talking about three main key points that Liz Young brings up: inflation, how this affects the market, and how this affects you as an investor. So stay tuned until the end of this video. You don't want to miss any of this. We're not financial advisors, and this isn't financial advice, so always do your own due diligence. By the way, ladies and gents, we've received a lot of comments asking about our Patreon with private SoFi Discord access. We actually just added some new features like a new options channel in Discord for those of you who like options. But currently, we've officially closed our Patreon and are not taking on any new patrons at the moment. But the good news is we're thinking of opening the gates back up to our Patreon coming soon. So as soon as we have a definite date, we'll be sure to let you all know. Without further ado, let's get right into it. SoFi's head of investment strategy, Liz Young, is once again giving us a pro tip on managing our emotions for SoFi in the middle of this chaos. Let's hear what she thinks about this earnings season.
And as we move through earnings season, that is a narrative that I think we're going to hear from a lot of CEOs, that there's a lot of uncertainty. They're questioning how much they can spend, how much they can expand for the rest of the year, and they maybe hit the pause button on capital expenditures, on other business investment until we have a clearer picture of what happens with inflation.
Did you hear that? CEOs are bracing themselves for impact while Warren Buffett is out there having the shopping spree of his life, spending billions buying the dip. It means companies could be in the spotlight today, but on the other hand, could also suck and turn out to be a huge flop. Liz Young dropped a few things to think about this earnings season, but to save you time, here are the three main key points she mentioned. Key point number one, never stop investing. Instead, shift approach and build positions.
And we've got midterm elections coming up, which are usually something that pressure the market. Despite all of that, the answer is never to stop investing. And it's really important to remember that whether you're a new investor, a seasoned investor, somebody that is trying to plan for certain goals down the road, the answer is never to stop investing. It's just that you have to shift your approach and probably build positions in the portfolio that maybe you didn't have a year ago.
Even if we're running out of clues on how much volatility is still left, Lizzie said,
"Calm the down.
Whether you're just a beginner in the stock market or a seasoned stock market veteran, Liz Young reminds everyone that this may be the time to change your approach to investing. I mean, everyone's investing style is different, but Liz Young advises to pick your defensive assets or defensive equity, the ones you hold when the market feels like the odds are against you. She mentioned she's bullish on the healthcare sector in the large cap space, and that you could find some treasures in the small cap companies with massive potential like biotech and pharma. Key point number 2, you get paid while you wait.
Building positions in sectors that pay dividends will have more of a defensive posture in the portfolio, and what I would consider you get paid while you wait. So if we're waiting out some of this volatility, why not get paid in dividends along the way and own some things that aren't as volatile as the rest of the sectors in the market?
This is what Liz Young had to say for those holding positions in companies that pay dividends. While we all don't know when this uncertainty is going to end, why not own something that seems unbothered by this volatility? Key point number 3, you may want to check out Bond. Not just any Bond though, I'm talking
James Bond.
Also, one of the opinions that is getting a little bit more traction, it was unpopular a few weeks ago when we started talking about it, but gaining a little more traction now is the idea that bonds can be a good place to build a position as well, especially some of those treasury bonds. And looking at the yield curve, thinking about the fact that bonds have sold off more sharply than stocks have already this year has made the valuation story a little bit more attractive for bonds. And that's something that we hadn't talked about for many, many years, that bonds...
Liz Young said this is yet another target, as many investors have seen that bonds have been sold off more sharply than the stocks in the market. Liz says, for years, bonds have been overvalued. The New York Times even said the 10-year treasury yield was moving down the drain for 40 consecutive years. And when the yield moves in a downward trend, it means the bond prices are surprisingly high.
Years that bonds continue to be so overvalued and they had nowhere to go but down. But now they've gone down quite a bit. And if you believe that we can see the Fed have some sort of dovish pivot or come off the hiking gas later in the year, or just the fact that maybe they don't make it to 8 more hikes this year, bonds could be a good protection element of the portfolio. So
we've been down in the trenches for so long, but what does Liz Young get to say for those who packed their bags and ran away?
Is that the only way out is through, and we have to just let this play out. After a day of indiscriminate selling like we saw on Friday, we may see another one today, we may see it a couple times this week. It doesn't benefit any investor to sell post those days, because usually, and we know this historically, some of the best days in the market tend to happen within 30 days of the worst. So this is not a time to run for the hills, but it is a time to reevaluate what you're buying.
Okay,
You can think about traditional...
If you've gotten this far in the video, you're a real one. Comment "Long live Liz Young" to be shouted out in an up-and-coming video. Forbes said the market will have its eyes stuck on banks more than anything else this earnings season, but all companies have no escape from these criticisms for the expected impact of higher costs and imposition of higher prices to protect their profit margins. On top of that, Forbes also said that unlike in 2021, banks will begin to increase loan loss reserves, lower investment banking, trading revenues, reduction in mortgage banking, and it will also face weaker wealth management fees. But the silver lining is that the banks could also have a potential improvement in net interest income, net interest margins, and continued loan growth. Once SoFi has fully transformed into SoFi Bank, this will probably all be a part of Captain Noto's game plan. Now, how about inflation? Is this peak inflation? If so, what does this mean for you as an investor?
Dropped. We also got another inflation reading, a CPI reading, 8.5%, which is a big, big number. Many people are trying to say that that's the peak inflation. It very well may be. My concern is that even if it is peak inflation, that doesn't mean it's coming down quickly anytime soon, and we're still going to be dealing with this problem. So I don't want to lead anybody to believe that even if it is peak inflation, it doesn't mean that problems are behind us.
Inflation isn't going anywhere, at least in the short term. And as far as we understand, Liz Young is telling us to keep our shit together. She's simply telling the crowd, don't stop investing, broaden your perspective, and reevaluate what you're buying. As of the moment, we all know how the market responds when SoFi's key performance indicators are up, but the price is terribly down. But in reality, Captain Noto and the rest of the SoFi gang doesn't disappoint, beating estimates and growing very fast. For those shorting SoFi, let's not forget that SoFi is getting ready to be the bank we we all knew SoFi could be, the ultimate one-stop shop that could take over in the fintech space. Just to walk you through SoFi's milestone in Q1 last year, SoFi achieved 110% year-over-year growth in members, garnering 2.3 million members who used a total of 3.2 million product in the first quarter of 2021. Considering how much they spent on their tech leg, aka Galileo Technologies, SoFi earned a quarterly adjusted net revenue of $260 million in Q1 2021. Compared to what you're likely in the coming earnings call, SoFi is expecting $280 to $285 million in adjusted net revenue, about a 30 to 32% year-over-year increase. SoFi's EBITDA, though, is set to be estimated at $100 million for the full year of 2022 and $0 to $5 million for this up-and-coming earnings call. Shout out to those who scream "Long live SoFi" in our comment section. We're right here holding with you. A special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all the support. Shout out to Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Shonda, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufrand, and Jay Bone. If you found any value in this video whatsoever, please smash that like button, share it with someone who you think would receive value, and subscribe if you haven't already. It helps a lot with the YouTube algorithm. Follow us on our social media platforms at Wealth Gambit. And just a quick announcement, we've turned our SoFi Investor Facebook group into a private group, just so we can all rest assured that spam accounts don't enter the group. For those of you who still haven't joined, you can still join by answering the questions we have provided. We just want to make sure you're not a robot. That wraps it up for today's video, guys. Are you ready to cry and hold for SoFi's earnings this May 10th? Comment down SoFi Moon below to manifest and secure our flight path to the moon. Until next time, peace.